Today I am going to explain about the property, plant and equipments, which is also known as fixed assets. I will be explaining all these topics with lots of examples. So what are tangible assets? Journal entries of purchase of any fixed assets, acquisition of a property, plant and equipment with example, and what cost to be included after acquisition, and what are the effects of all transactions on the profit and loss account and balance sheet. So what are the tangible assets? Those assets we can see and touch are known as tangible assets. Just like a vehicle, we have a car, truck or van. Furniture, table, shelving, filing cabinets. Inventory, stationery, packaging, food and clothing. Cash and account receivable, these are the current assets. Property, plant and equipment, these are the fixed assets. Now I am just going to explain some of the assets with some examples. On 10th of January, company purchased 5-year-old truck for business use worth $35,000 and payment is made by check from Scotia Bank and useful life of the truck is assumed 7 years from the date of purchase. So general entry in this case would be, as we know the truck is a fixed asset. So according to the debit and credit rule of accounting, we know this is the real type of assets and debit what comes in and credit what goes out. These are the general rules. So the truck account debit to Scotia Bank, this is the general entry for this. So why we have put on the credit side $35,000 under Scotia Bank? The reason being Scotia Bank is a personal account and we know as per the rule credit the giver and debit the receiver. So in this case bank is giving money. So credit the giver that we have put it here. So this is current assets and the assets value has decreased, but on the other side the fixed assets value has increased. What will be the effect on the balance sheet? On the balance sheet we can say that on the asset side truck will be shown here under the fixed assets and Scotia Bank under the current assets. Second example, on 20th of January, company purchased furniture worth $15,000 and payment is made by cash. So now there are two elements in one transaction. The first is furniture and second one is cash. So furniture account debit to cash $15,000 that we have made a journal entry. So why 15,000 is a debit and why 15,000 is credit under the cash? So we know that furniture is a real account and we know real account rule is debit what comes in and credit what goes out. So in this case furniture value in dollar is increased, so that's why we have put on the debit side. On the other side the cash is credited, the value of the cash has gone down by making payment. So credit what goes out, this is also the under real account and it will fall under the current assets in the balance sheet. On 20th of January, company purchased a photocopier machine worth 75,000 and payment is made by check. So useful life of the machine is estimated 10 years with the salvage value of $5,000. So general entry for this will be photocopier machine account debit 75,000 to Scotia Bank 75,000. So in this case there are two elements in this transaction. So one is a debit and one is credit as per the double entry system. So photocopier is the real assets that we can see and touch, so which is known as the tangible assets. So the real assets rule is debit what comes in and credit what goes out. So photocopier is coming in the business, so that's why that we have put on the debit side. This is the fixed assets of the company and the value of the fixed assets is going up. On the other side Scotia Bank that we have put on the credit side. The nature of the Scotia Bank account is personal. So we know the personal account rule, debit the receiver, credit the giver. In this case, the bank is giving money on our behalf because that we have paid check to the company. So debit the receiver and credit the giver. This is not fixed assets. This is the current assets. So value of the current assets is going down. So that's why that we have put on the credit side. What will be the effect on the balance sheet. On the balance sheet, that photocopiers will come under the fixed assets and Scotia Bank will come under the current assets. Now I'm just going to explain a little bit more about the property, plant and equipment. So this asset class can represent a significant proportion of company's value that cannot be liquidated easily. So these are long-term tangible assets that we can see and touch, and also known as non-current assets that are used in the operation of the business and have a useful life of the assets more than 1 year. So sometimes we can say that these are the capital assets or also known as fixed assets. Take an example, the heavy machinery or landscaping tools such as land movers, trimmers, or maybe some factories and warehouses that comes under the property, plant and equipment. So at the time of buying or acquiring of the fixed assets, so what we include in these? All costs necessary to bring assets to the location necessary for its intended use should be capitalized. In addition to the cost of the assets, company incur shipping expenses, delivery charges, setup and installation cost, and testing cost to get asset ready for use. Remember one thing in your mind, these costs are included in the cost of the assets. I would like to explain at the time of acquisition of the assets, what are the different expenditure that we include in the cost of the assets. For example, on January 25, RJ Private Limited Company purchased a 5 machines with a cost of 50,000 and the company pays $1,000 for shipping cost, 2,000 for installation and 1,000 for labor, 1,000 for insurance and duties. So useful life of all machinery is estimated for 10 years. And we capitalize all the costs required to get the assets ready to intended use. So what will be the total cost of the assets? So $50,000 that was the price of the assets, means the cost price of the assets plus 1,000, 2,000, 1,000 and 1,000. All these were the expenditure made to buy that machinery. So $55,000 that is the payment made in full by check. So journal entry would be machinery account debit to Scotiabank. What will be the effect on the balance sheet? On the balance sheet, machinery will comes under the fixed assets and Scotiabank will come under the current assets. Cost incurred after acquisition of assets means what are the different costs or expenditures that we incurred once that we bought the assets in our company. Costs that maintain the assets, such as ordinary repair and maintenance, should be considered as expenditure. For example, frequently oil and filter change, gas, and other minor repairs. For example, on 5th of February, $500 is paid by check to ATI Truck Repair for truck services. What will be the journal entry for this? Repair and maintenance $500 to Scotiabank $500. So repair and maintenance is expenditure of the company. So that will comes under the expenditure. Like debit all expenses and losses and credit all income and gain. So this is the repair and maintenance should be common here. Here should be the expenditure, right? This is the nominal account, not a real account. So under the nominal account, debit all expenses and losses, credit all income and gain. So once all the expenditure value in dollar, if it is increasing, we will debit it, otherwise we will credit it. And Scotiabank is the personal account and credit the giver. This is the current assets. So what will be the effect on the balance sheet? Look at this. On the profit and loss account, we will see that repair and maintenance that will come on the debit side of the profit and loss account, and the Scotiabank that will comes under the current assets under the balance sheet. What cost should be capitalized? This is the question that comes in our mind. All those costs that extend the life of assets or increase the productivity of the assets should be capitalized. So capitalized mean to be added in the book value of the assets. So these are the significant investment in the PPE. For example, 5-year-old pickup truck in the company with 20,000 miles on it and could be used more 100,000 miles if you replace the transmission. So transmission, there will be a big expenditure for that machine, for that truck. So that can be capitalized. Now, I would like to make an example. On March 10th, RJ Private Limited made the following expenditures related to the PPE. The first expenditure was renovation to the group of machines at the cost of $20,000 to secure greater efficiency in the production over the remaining 10 years useful life of the assets. Second expenditure is continuing and frequent and low cost repair at cost of $5,000, replacement of broken gear on machine at cost of 2,000. Now the question arises, what total amount should be charged to repair and maintenance of for the current year? So the answer is, to maintain the assets, $5,000, that was the normal expenditure and repair, and 2,000 for the broken gear, that will be added, and total $7,000 will be considered as expenses of this year, and 20,000 will be capitalized, means that will be added in the cost of the assets. Note one thing, all payments are made by check. Now see the journal entry on the next page. So what is the journal entry here? Repair and maintenance account debit to Scotiabank. So $7,000 is the debit and 7,000 is on the credit side. So next is the machine account debit to Scotiabank. $20,000 on the debit side and $20,000 on the credit side. You can see that the nominal account I have written here for the all the expenditure. So debit all expenses and losses and credit all income and gain according to the golden rule of debit and credit in accounting. What will be the effect on the profit and loss account? So on the profit and loss account debit side, we write to repair and maintenance, and machinery, that will be write on the asset side of the balance sheet under fixed assets, and Scotia Bank we will write under the current assets in the balance sheet. Now what is the conclusion? We have learned today what are different tangible assets and also learn about the property, plant and equipment with lots of example and effect on the financial statements.